now let's talk about just banking. Okay, so um, when your business uses banks, the bank itself has a bunch of stuff set up to kind of safeguard this asset that your business has, which is cash. Okay. Um, so for example, they have signature cards. Okay. So when you have like a business account, usually, and now they probably have some AI, like, image recognition that checks like the images for every check, and it probably has some pattern recognition. But basically, they want to make sure that any check that you have or anything that you signed is actually your signature. Okay, and so they have ways to reject any check or any document that is deemed to not be your actual signature. And so back in the day, they would just have a card, like a physical card that you would come and sign. And before like everything was electronic, they would compare your signature to whatever checks they received to make sure it's legit. Now it's kind of done electronically, and it scans the check and does all this other stuff with tech. But really, the goal is to prevent forgeries. Okay, so um, they have that. You have receipts for everything. So when you make a deposit, there's going to be some record of that. They'll give you a printout, or now it's like all electronic, so you can log in to your bank account um, records and see everything. So there's always going to be like a very transparent paper trail for all deposits and withdrawals. They're also going to have statements. And again, back in the day before the internet, they would mail you a paper statement every month. Okay, now they still provide, there's still a monthly statement, but it's like a PDF, and now you can have like real time tracking of your bank statement by just using the internet and like your account online, right? So this bank statement kind of thing is old school, and it'll probably disappear at some point. There will probably be probably like by law, they have to do it just because the bank regulations are like written a long time ago. But at some point, you could assume that they're going to phase it out, because like now you don't really need a monthly statement because you can just track your bank account like real time. You don't need just a once a month update. Soon they'll have ways. I have a friend that worked on a startup where they will, like a loan processor, or like a mortgage lender, or like even a landlord. They will have a way to interface and connect to all your financial stuff directly, right? So you give them permission, and then they will then just be able to like kind of log in and like have access to your bank account, like your all your credit information. And it would be easier for you, right? Because you right now you have to kind of download everything and email it and all this kind of stuff. um, but yeah, yeah, there are plus and minuses, definitely. But yeah, it's not necessary. It is just the way it's done now, but the technology exists to kind of even get rid of that. Okay, and then checks. Okay, so this is how many people have written a check in their life. Okay, so still medium amount. Now people pay rent, and usually like the big use of checks is like writing, like if you have a business, paying a lot of your expenses. But for like regular people, just paying your rent, you would use the check usually. But now I think people use Venmo, and a lot of landlords have like a online portal to make direct withdrawals. So I think check writing is kind of getting phased out too. Um, but it is a document. Um, it is a record of a transaction. Okay, so we'll look at a check in a little detail, but the bank kind of produces the checks, and it has certain safeguards too. Okay. Okay. So what is a check? So this is the actual check here. I Hopefully many of you have seen this. This is just like if you have a business account, you'll get like a checkbook that has a way that you can also write what the check was written for. Because once you write the check and give it to the person, it's kind of gone, right? I mean, nowadays, once the person deposits it, it gets scanned and it gets put on your online account. But back in the day, that didn't exist. So you would have to have some place to record what the check was for, which is kind of this top part. Okay, so uh, who are all the different parties involved? Okay, so there's three parties to every check and to every payment, you can say. Okay, so the maker, which is your business. Okay, so it's this party here. Okay, the person that's getting paid. So this is right here, and then the bank. Okay, so this is the bank information, and really this is the bank information. This is a routing number and your account number. Okay, so it's like an address. It's telling so when this person gets the check, they're going to give it to their bank and say, hey, this money is for me. Their bank has their account information, right? Because it's their bank. Their bank will then use this address to be like, okay, this is the bank that I need to go talk to. And then this is the person, or this is the account at the bank that this money needs to come out of, right? So uh, basically, this routing number goes to this bank. And so the person who deposits it, their bank will talk to the person who wrote the check's bank and be like, hey, does that person have $300 in their account? If the answer is yes, then they say, okay, I have a check that your person wrote to transfer $300 from their account to my person's account. Okay, then your bank, if you're this company, will say, okay, well, show me the signature. Let me make sure it's legit, that my person actually wrote the check. They'll verify that this signature is indeed the owner's signature, and if so, they will initiate this transfer. This is why check clearing takes a couple of days, because it's basically this process happening. Of course, it's not like a person calling back and forth. It's all electronic. It's all done in an automated way. But essentially, that's what's happening behind the scenes. Your bank, if you're the person depositing it, is talking to the person who gave you the check, their bank, verifying that the funds are there, and then the clearing of the funds. Okay, so that usually takes a couple of days. This is also like a old school uh, way of doing things that still exists. This is like, how a lot of transactions are still kind of cleared in the country, and it's still going on. So the checks are numbered. So again, there's a check number here and number here. So you as the writer can keep track of your checks, because now it's all electronic. It'll show up on your bank account. But before, back in the day, on the statement, it would just have the check number, and you can see if 201, 202, 203, and 205 have been deposited, you'll know like 204 is still floating out there, right? So the check number is also helping you kind of keep track of what's going on with your checks. Okay, so written amount versus numerical. So which one is the official? So if you wrote 300 here, but let's say this was 3,000, which one is the bank gonna follow? Okay, yes, that's correct. The written one is the official. That's why they have you write it. Okay, because this can be manipulated. You can get some whiteout, put this and move this over and mess with the written number. Okay, so if there was ever a discrepancy, they're gonna just follow what is the written amount. And this is another check, or another safety feature of the check, right? They want to make sure that there's no fraud. And really, this is just kind of like a convenience thing. The official one is this. Yeah, and the remittance advice is just the top section. This is just stating what the check was. If once you've made the check, you've given it to the person, so you still have a record of it. Okay, so then the bank statement also is another kind of document that's useful, and it has its own kind of details that are important. So again, what is it going to have on it? It's going to have beginning and ending balances. It's going to have whatever was deposited into the account, whatever checks were written. Not just the checks that were written, though. It's the checks that were written and deposited by the person, right? If you wrote a check to someone and they just have it in their wallet and they haven't deposited it yet, it's not going to show up on the bank statement yet, because the bank is not yet been asked to take the money out. That's only going to happen when the person you gave the check to goes to their bank and deposits the check, right? Until then, it's just floating in the ether. And maybe they lost the check. They're going to call you up and be like, hey, I lost the check. Can you send me another one? At that time, luckily, you'll have numbered checks. You'll remember, hey, check number 207 was written to them. You'll call your bank and be like, do not deposit 207 because I'm reissuing that check. Because the person could be scamming you too, right? They could have your check, call you and say they lost it, and then you'll give another check and they'll just deposit both of them, right? So you would have to take the preemptive step of canceling that original check that you wrote, just so you don't get scammed like that. Okay, so yeah, so in this context, when the bank statement is going to show it, that means that the check has already been deposited by the person into their account. I guess stop payment is the technical. Yes, that's when you've given the check, but you don't want that check to be actually transacted. So that's the case where you gave the check to someone and they said they lost it, right? Then you don't want that check. Now you want that check to be like non-existent. You don't. If it later comes in, you don't want it to be transacted, right? So then you would call the bank and say, "Hey, issue a stop payment on check 207 or whatever it was." And so even if that person afterwards, after you made the stop payment, if they try to deposit it, the bank will not honor it. So look, you give the check to this person, right? They go to their bank, they give this check to them. This bank goes to your bank and says, "Hey, here's this check that was given." So now the check is here at your bank, back to your bank. Verify the signature. This bank, your bank, verifies that yes, this check is good. They'll transfer the money here to this person's bank, but now they still have your check. They will then stamp it and say it's deposited. And back before they would then you could go get your canceled check back. Because it's now the money's been transferred and now this check is kind of the whole round trip is complete. It's done. EFT payments. So it will show some people will deposit money directly into your bank account and you never were notified of it, right? It's going to show up on your bank statement, okay? Or if you get a wire transfer or something. Okay, so the bank statement is actually the source document for that payment. You'll see it show up there. Also, you'll make payments. So who's set up like auto pay for their utility bills or whatever, right? Yeah. So you don't actually write a check. There's no document that you've created to memorialize that transaction. It's just going to show up in your bank statement. The bank service fees, again, they'll just take the money out of your bank balance for any fees, which is a real cost, right? So for your accounting system, you're going to have to account for that loss of cash, right? You're paying the bank some money. You would have to need the bank statement to see those fees, right? Because they never sent you an invoice. They usually just take it out of your account. But you need to have that expense reflected in your accounting system. So you would see that on the bank statement. NSF, non-sufficient funds checks. What do you think that means? Okay, this is checks that you tried to deposit from someone else and the check bounced, right? So your bank would be like, well, we tried to verify or get the money for you, but we couldn't get it. Okay. So in your accounting system, you're like, yay, I got money. But at the end of the month, when you get your bank statement, you're gonna be like, actually, this cash didn't actually come. So my accounting system is wrong because I kind of preemptively said I got the cash. I assumed that the money was there. But at the end of the month, if you saw an NSF check, you'll have to change your accounting system because you'll have too much cash recorded. Again, the key thing is that your accounting system has a balance of cash, right? You're going to have accounted for all your transactions and you're going to have some balance. The bank statement is also, and so this is, let's say, July 31st. Your July bank statement is also going to have cash as of July 31st. These two are not going to be the same, okay? For various reasons. We listed some of them. If you had an NSF check, you would have debited it to your accounting system, but your bank statement is not going to have it because that check didn't go through. The bank fee, you never got any invoice from the bank, so your cash here is going to have too much cash because it doesn't have that bank fee. But this bank statement cash will have the fee, right? So there's a discrepancy between your accounting system and the bank statement. They should be the same, right? The amount of cash that your balance sheet shows should be the exact same that your bank statement shows, right? But there's differences for various reasons between your bank statement not including certain things and your bank statement including things that your accounting system doesn't. So it works both ways. Okay, so this is like a bank statement example. Okay, so this is just like a test person. This is their. So it gives you a average balance for the month, service charge. It looks like they earned some interest. So they have a previous balance, right? So this is a starting balance plus the additions minus the subtractions give you the ending balance. It's the same beginning balance plus additions minus subtractions ending balance. This is the same framework they're giving you for now in the context of a bank account. It's going to list all the transactions. So you can see credits, debits. These are the deposits. These are the withdrawals. It's going to list the entire month. Okay, now it's going to have all the checks that were cleared. Okay, so all your check numbers, and then it's going to have your balance every day.